Hi, this is Bronson Hill, the CEO of Bronson Equity and the author of Fire Yourself, Replace Your Working Income with Passive Income in 3 years or less. And I had a great time on this episode of the Business Growth Architect Show, where we talked about how to vet any deal of any sort of asset class, particularly those outside of real estate, private deals that cash flow really well, that have tax advantages and help you grow your wealth without taking up more of your time. So I encourage you to check it out. It's a great episode. I look forward to connecting with you.
Welcome to the Business Growth Architect Show. I am Beate Chelette. I am the host. I want to welcome you to our globally top 10% ranked podcast, where you will hear from industry experts about the strategies that are working right now to unlock hidden opportunities in any market, so that you can grow your authority and scale your impact. And now, let's get started with the show. Welcome back to the Business Growth Architect Show. I am your host, Beate Chelette, and today we are going to be talking about something that you all want: freedom of time and money. And I brought Bronson Hill to the show today, who is going to be talking about alternative investments. So not the typical real estate stuff, but other ways on how can you gain financial freedom. Bronson, I am thrilled to have you on this
It's
show.
really excited to be here and really excited to talk about, it really is like you got to have a plan. You got to architect, you got to have a growth strategy for a business as well as your finances. So I'm really excited to get in the conversation.
Excellent. So why don't you tell our guests who you are and what is it that you do?
So my background, I was in medical device sales for about 10 years. I was getting paid really well, making over $200,000 a year. I was working 20 to 30 hours a week, so I didn't even have to work that much. But I would go into heart surgery and different sorts of surgeries and help, wear scrubs and go in and assist physicians. But I didn't like that I had to show up when it was on their schedule. It was hard to take vacations. Even though I wasn't working a ton, I had to be around. And so like a lot of people, I wanted financial freedom and I thought I'd do it through real estate. But I realized that owning single family houses, I got to where I own 4 or 5 single family houses. It really didn't lead me to the type of income that I needed to get. And it just took up way more time. And so a lot of people think we want financial freedom, but really what we want is freedom over our time. We want to have the flexibility to do what we want when we want. And that really kind of led me on a journey to learn about passive investing, to learn about these deals called syndications or private placement deals. They basically involve, putting money into a deal where I can be passive. I don't have to actually be an active investor, and I can get cash flow sometimes way better than if I did it myself. So for high earners or people that have a business or people that, they're trying to get more control over their time, passive investments, especially on alternative investing, typically offer much better returns, and they typically have a different risk profile, and they also don't take up more time once you vet the deal. So that's really my journey now. I've had over 1,500 one-on-one phone calls with high net worth investors, just kind of coaching them and trying to understand where they're at, helping them to do things like reduce taxes and grow wealth without taking up more time.
So for full disclosure, I'm an investor in one of your syndicated deals, and it is a car wash. No, it wasn't. It was the ATM.
Yeah.
And so what interests me about what you do is that you have somehow figured out something that is not the traditional real estate investing, right? We have had people on the show that have told us that there are more millionaires and rich people in real estate investment than there are in any other profession or investment category. And then here you are, you talk about car washes, you talk about ATMs. So tell us a little bit about how does this even work?
Yeah, so it's a great, going back to your point there, there is a lot of wealth created through real estate. We have a lot of real estate. We have 200 million in multifamily assets. We've done syndication with that. So we kind of have almost be able to see on both sides of the curtain, right? The traditional kind of real estate or apartment investing route. And then we've started doing other alternative investments, because anybody who's invested in the last couple of years in real estate has really discovered, for the most part, that things that were cash flowing have stopped cash flowing because of interest rates rising. Some of the valuations have changed. Expenses have gone up. There's been a lot of issues with we've seen just in general, not every deal. There's some we still have that are cash flowing great, but in general, it's hard to find new deals or deploy capital knowing that you're going to get cash flow. And I've come to the belief that if you compare long-term appreciation, making a lot of money someday versus getting cash in your bank account this month and every month or every quarter, I have a strong preference for cash flow. As I talk about in my book, Fire Yourself. And basically, cash flow is so amazing because it allows you to live off of what's coming in. It allows you to have the idea of making work optional. Or a lot of people that we know that are business owners, if they sell the business or quit the business or retire or whatever, like they just stop making money. So the ability to learn how to make money passively is incredibly valuable. Again, when you look at any investment, I know we'll get into this in a bit, but when you look at any investment, it's important to look at not just what is the asset, but what does it do for you? Is the goal to get cash flow? Is it to have appreciation? Is it try to reduce taxes? Like, what is the goal? And then if you're looking for that specific goal, if you've decided what you're looking for, you can find a lot of things, particularly in the business world, cash flow way better than real estate in general. There are businesses, actually, this is kind of on a side note. If you were to buy a private business, maybe in your neighborhood, a laundromat or a home care business for seniors or something like that, a lot of these businesses sell for 1 to 3 times earnings, right? So you can literally, and sometimes you have to, you put a little bit down. So obviously that's a much more active route to go, but it just shows kind of that there typically is a lot more cash flow in other types of things beyond real estate. And when you get cash back, the ATM deal you mentioned, if you get paid, pretty quickly and you're getting a monthly payout, it's reducing your risk every single month because the amount of capital that you actually have still left in the deal of your money is being reduced every month as well. So, I mean, I think that there's a lot of things out there. We do ATM machines, car washes, oil and gas deals. We've done some VC stuff, medical office building developments. We've done different types of businesses. We've done different types of things. And I think, again, it's just important to decide what you're looking for and then think about, okay, in this investment, do I understand how it works? And is it something that makes sense for me?
So there's a couple of things I want to bring up now. Number one, can anybody invest, or are there certain criterias? Because I had to have my broker send you a letter that says that I have a certain amount available for investment and understand the risks. So what are the criteria for me to invest in something like this?
So yeah, there's different parameters. Generally, there's a minimum net worth for any deal we do. Some are, there's a term called accredited investor, which it's not like a gold star that you either accredited or not. There's 2 ways you can qualify. One is through a net worth requirement, $1 million outside your primary residence. The second way is through income. So if you're single, it's 200,000 per year. The last couple of years, expectation going forward in income. If you're married, it's 300,000. But basically, those are the ways you qualify for most of these deals. And most of these deals that are kind of in businesses or other types of alternative things typically require that people are accredited. The reason why is the Securities and Exchange Commission has just wanted to say if people are doing these types of deals that are a little bit non-traditional in the sense they're not publicly traded, you're not using an investment advisor. They just want to make sure somebody has a level of sophistication or at least a level of net worth or income that they should have some understanding. Or even if they don't, if something doesn't go well, then they have enough income or net worth to be able to cover, or they can kind of learn from things that they're doing. They are talking about changing some of these requirements to, instead of having a net worth or an income requirement, having somebody take a test. And so they've talked about this for a few years. They haven't actually done it, but they're talking about changing it to that you take a test, and no matter what your net worth is, then you qualify, which I think is probably a better way to do it, because then it requires some people to get some education before they can actually invest in certain things. So, but yeah, in general, if you have a net worth or income that qualifies, you can qualify for these type of deals.
Yes. So now I qualify. Now I have, let's say I understand that I want to invest money in some of these deals. Is there any amount of money, or is it typically a threshold? Is it like 25,000, 50,000, 100,000, or is it just deal by deal by deal?
So it depends on the deal. Typically, it's usually the minimums are kind of 50 to 100,000. So it's not like you buy a stock, you buy 1 share or something. Usually it's a minimum amount. We have a minimum on a lot of our deals of 100,000. Some of them are a little bit lower, but in general, it's just that we want to give great service to people that invest with us. If we've got a lower amount, it does allow people to dip their toe in, but it also it's just a lot more administrative work, and it doesn't allow us to provide as good of service to everybody. And there's a cost. When we do this for example, the ATM fund, for everything we do, there's filing fees in different states. There's things we have to do based on where an investor is located. And so there's some fees that go with that. There's also the taxes that are a substantial amount to be able to cover. So we just want to make sure it makes sense for investors, and also we can provide good service. But I think there are some, might do 20. Usually it's very unusual to have somebody do 25K, but it does exist. And sometimes if you ask, somebody might make an exception. So you never know.
Okay, good. All right. So now that I am ready and willing to go and look at something like that, and the idea of having cash flow is amazing. I mean, when I ran the deal that I ended up investing it by my broker, and he saw the percentage, the return on investment, he said he likes these kinds of deals.
Yeah, that's good. That's a
So,
rare broker though that'll admit that, because a lot of times they don't. They'll say, "Oh, they want to keep it in house because they will get a fee off of stuff." It sounds like a really
well,
good.
but at the same time, he also understands, it's his fiduciary duty to advise me
Sure.
in, what is good for me, not just what's good for the brokerage that he's currently employed by, which is why he's my broker. So,
Right.
but you made a very, very good point, and I want to make sure that the Beehive, that you all heard what Bronson just said. And it is, if you ask certain financial professionals in these non-traditional deals what their feedback is, it may not be positive
Mhm.
because they don't make money on this. And they're going to say things like, let me guess here, it'll be like, it's very risky. It's much more risky than investing in stocks, which is complete bullshit. Because if I look at somebody like Elon Musk, I mean, every time the man opens his mouth, the stock fluctuates. I want to put a gorilla duct tape on him, take X or Twitter away from him, and have him actually do the work and not talk anymore because it's just so bad for the stock performance. So be prepared that there is a certain level of scrutiny. Why is there so much scrutiny? Or there's a why do people not like these kinds of deals?
Well, I mean, it kind of, just to your point, what you're sharing, in the financial world, you think of it, how are we educated about finance? We're not taught finance in school. If you don't talk about it in the home, you never learn it. And that's why there's such a gap between wealthy and poor, as usually wealthier families do teach their kids. I have a thing at nighttime, we read some Bible stories, and then we read this finance book, right, for kids. And I'm just trying to get her to, she's like, why are we doing this? But I'm like, well, it's because I want you to learn about this. It's really important. My daughter's 11, but it's this how to turn $100 into $1 million. And it goes over kids that might be a good recommend for your audience, but kids that did this, they basically created multi-million-dollar businesses and how to do it. And so it just kind of plants in their mind what we would do with that, how would that work, how to create the goal. But I mean, back to your point, what we're taught about finance really is usually from Wall Street. And the reason they'll spend billions and billions and billions of dollars on advertising to convince you that these are safe, secure investments. And they really did a smart thing back in the 70s and 80s. There was a law passed called ERISA, which stands for the Employee Retirement and Income Something Else Act. But basically, it started that instead of having people having a pension, you had this kind of defined contribution that you put a certain amount in your 401k. So you're encouraged at work to put money into these Wall Street kind of things and have some sort of mutual funds or the things there and save for your nest egg. But the challenge is, just to your point, is these are incredibly volatile, risky type of assets. And I mean, sure, if you invest and you put things in there, it can maybe become like a savings account for you over the years. And a lot of people need some sort of plan, and it's great. But if you're savvy, and if you're willing to learn, and you're willing to invest in yourself, for the intellectual capital, invest in yourself, you can learn about these alternative things. And actually, it's really interesting what you say. I had a client who, an investor who got in the same deal, the ATM deal, and his investment advisor advised him just exactly what you said. Don't do it. It's too risky. It's what's going on here, this and that. And he brought up, returns and different things. And then I said, well, let's talk about two things here. Let's talk about what the returns were in the portfolio in the last 12 or 18 months. And it was like it had gone down by 20% with this guy, right? And so that this guy's traditional finance. And then I said, the second thing is, if you put things over there, he's no longer going to be able to kind of monitor it. And I said, either this guy is not wealthy, or he got wealthy through his business or through some other means. So if you look at how, like, traditional finance is okay for people that are already wealthy, that are trying not to lose their wealth. I think there's some benefits there. But if you're trying to become wealthy, you can't follow traditional finance methods. And I'm a former investment advisor. I was an RIA, which is a registered investment advisor. Now I'm still an RIA, but it's a recovering investment advisor. I'm no longer registered. I tell people that because it's like taking the red pill in the Matrix. Once you see it, you can't go back to just life as usual. You see things differently,
Yeah.
and you realize this thing that they're saying is really kind of helping you with your retirement. A lot of these people are just out there to kind of push their own agenda. They get paid even if you lose half your money. Like there's not an alignment of interest, which is a real challenge.
Yes, and that's the line item. It's the quarterly fee for the brokerage. Yes, and that gets paid like it or not.
Yeah.
So, we're going to take a quick break and then we're going to talk about the system that you've developed to evaluate deal structures. And we will be right back after this quick message. Are you looking for the hidden opportunities for you in this market? Or are you simply wanting to figure out what is your unique differentiation factor that makes clients want to work with you and not your competitors? If this resonates, I want to invite you to go to uncoverysession.com and schedule your 15-minute complimentary uncovery session with one of our business growth advisors that will take you through what your number one business growth blocker is, what you can do to remove it, and what your very best next step should be. And now let's get back to the show. Welcome back. Beate Chelette here with Bronson Hill. And now we are going to dive into what system or methodology you use to evaluate if it's a good deal or if it's a good investment opportunity. Spotlight on you and go.
All right. So this is just for the beehive, right? You guys call yourself
Yeah.
the beehive, right? I love it.
Yeah, we call it the beehive. Yes.
So if you're a busy bee and you're in the beehive, this will help you.
There you go.
So I have my book, Fire Yourself, and I talk about this in the book. One of the chapters, it's like a funnel. So when you start, a lot of people start with looking at a deal. So if you go to real estate meetups, you hear about deals from a friend, whatever, you hear about a deal and you're like, well, is it a good deal or is it not a good deal? And I don't think that's the correct area to start. Now, a lot of times that's how it happens. You get sent a deal and then you've got to kind of work backward from that. So what I initially tell people is, whatever you're interested in, find out what your parameters are. But first of all, find out with any deal, what is that specific market. So we talked about ATM machines. I love it for cash flow investing. It's a great way for people to start doing that. So it's important to look at, well, is the ATM machine market growing or is it shrinking? Well, shockingly and surprisingly, people like you and I, we don't use ATMs and pay fees, but there's 10% of the US population that doesn't even have a bank account, and it's growing at 4.1% per year, the last 5 years expectation going forward of how many transactions there are of these private ATMs. So we're seeing growth in that market, right? So, and this works as well. If you're buying property in Atlanta, Georgia, well, is the population growing or is it shrinking? What is the market there for what you're buying? If you're buying in a shrinking market, for example, in real estate, if you're buying in Cleveland, Ohio, you may do fine, but you're typically not going to have a lot of population growth. Generally, the market, you just have to be aware of things about that market. So once you figure out, okay, what the market is, if it's growing, again, in real estate, we talk about population growth, job growth, income growth. Well, it also exists in oil and gas. It exists in other types of deals. Well, what is the market right now? We've got a huge underinvestment in oil and gas over the last 10 years. We're going to continue to need more of this. As much as I'd love to go completely green, like even California, we're using 50% of the electricity is produced by burning fossil fuels. People don't realize that. So when I run my electric car, which I have, about 50% of that is imported, and it's usually used through burning coal or natural gas. So I look and say, okay, well, there's still a market. There's going to be a need for these other, things like oil and gas. So looking at a specific market, that's the top. The next one down is the operator. So who is the team that's actually doing this, right? So once you figure out the market is a good market, if you buy in a good market, you could do a lot of things wrong, and you're still in a good spot. So I kind of think of it like the rising tide raises all the ships. So if you're just in the right area of the market, that's good. And the second thing, like I said, is the team. So who is the group that's doing this? What's their experience? Have they done this specific type of deal before? If they haven't done this type of deal, it's going to be more risk, right? I love having somebody on the team or some team members that have been doing this for at least 10 years or more. They've got track record, they've got experience, they've got things that have gone well, things that haven't gone well. You ask a lot of questions, what has not gone well in a deal before, and if they don't know how to answer that question, either they're inexperienced or they're not being honest. So you will learn kind of everything, single thing you do. So I get into more detail in my book. So the second one is the operator. The last one really is the deal, the specific deal itself. So once you get through the market and the operator, you want to look at the specific deal and say, does this deal make sense to me? Do I understand how I'm going to make money? And probably more important, do I understand how I could lose money? What's the one or two primary risks of this deal? Because every deal has risks. If you're ever in a deal and they say, oh, there's no risk in this deal, turn the other way around, because there's always risks in every deal. But you want to make sure you have an understanding of what it is, how it works. And Warren Buffett, one of the greatest investors in the world, says, we never invest in anything that we don't understand. So if you don't understand how it works, there's some black box system where you can't understand it, then don't do it. You want to make sure you have a really good understanding of how this specific investment works. So those are a few things I think that are really important. We can expand on each one, but I think it's important to have, if you start with the market specifically, you work your way to the operator. And once those two kind of check out, and then say, well, is this specific deal, will it meet my goals as an investor? Will it do what I want it to do? And do I understand kind of the pluses and also the risks involved?
I love that. So I'm going to give an example of something that I heard so that we can make this like super real for people listening. So I was listening to the Chapman economic forecast, which is really one of the few economic forecasts I listen to because I like the guy. And he said that California does not tell you is that more people are moving away than people are coming. We now know that the number is somewhere in about 150,000 units that are available because people are moving away. That may not sound like a lot, but if you have that many units becoming vacant, and you now have this 2, 3, 4, 5 years, next thing you know, there is an acceleration and there's a million units that are empty. Now, in the real estate development market, people have invested enormous amounts of money, bought overpriced properties on commercial loans that are not 30-year fixed loans that keep resetting themselves. And now we are facing what some people believe will be an Armageddon when these loans are resetting themselves to the now current interest rates with a market that we now, based on the economic forecast, know is going to change. So that would be one of those things that you were telling me I need to pay attention to before I make a real estate investment deal in a 100 unit apartment building. Is that right?
Yeah, and that's a good point too. Now we own 2,000 multifamily units. We don't own anything in California. You and I both live in California, and there's challenges of that market, right? So we buy in areas where not only we see population growth and all those things which you mentioned, but there's also landlord laws, right? There's in some southern states, you can get somebody out within a week or two of them not paying and expressing that they're not going to pay. Versus, I have a friend who's kind of a mom and pop, owns one or two houses in the LA area. We've all heard these stories. You know, the tenant showed up and they had documents, everything, but they're all fake. He took their background check rather than doing a background check himself, and took their pay stub, which was fake and everything. And these people stayed for 4 or 5 months. And it really hurt it, right? So I think buying in areas where they're business friendly, they're landlord friendly, but a place like California, where I think some of these things that are causing people to leave is just some of the business friendly or not business friendly stuff. And I think it exists in real estate too. So that comes down to like the market itself and exactly what you're saying, the population that really is whatever investment you look at, looking at the landscape of what, how it's going to be to actually operate that business or that real estate in that market.
Yeah. And the second thing that you said is only invest in things that you know. And I want to give also an example here. And that was actually many, 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 many years ago because I love technology and I found out about Amazon AWS because we used it. When I found out that a lot of the large companies went onto AWS because it allowed server capacity to be added very quickly across the globe because they were setting up this huge network. That's when I bought all my Amazon stock. But Amazon wasn't performing well at the time. But I knew that because we did it on a much,
Yeah.
much smaller scale, that there was a high probability. And then Amazon just went through the roof. I made a ton of money with Amazon for the AWS alone. And it wasn't even promoted in any of these investment calls or in the SEC filings. It was a line item, but it wasn't talked about until they had something to talk about. And then it became like the flagship and everybody's like, oh, AWS is the big deal. But I knew because it's something that interests me. So are there any other examples in things that mean I'm interested in something because you may have insider knowledge and you don't even know that you do? So is there anything you can add to that?
Yeah, well, I think it's a great point. I mean, you made a decision based on your experience. I will say this about private deals because people say, "Well, how do I find out about these deals? How do I learn about this stuff?" And of course, there's groups like us that we have calls with investors so they can learn about them. There's many out there like us that do this, but a lot of times it comes through referrals. It comes through a friend. It comes through somebody letting you know about something. And you had firsthand knowledge of AWS and what was going on with Amazon, where a lot of people didn't, and people that are just in their ivory towers, kind of looking at financials, wouldn't see that. So that's where I find a big element of this is a networking component. So it's important to educate yourself, but equally important to grow your wealth is the networking component. I know a guy who's a full-time passive investor. He retired from his business. All he does is just look at investments, and he's in like over 50 deals, which I think is too many. But he spends a lot of time just having calls and networking with people. Hey, you see anything interesting? Is there any new deals that are coming up? And so what happens is it brings kind of this new deal flow. And then of course, if there's someone that you really respect and you like the way they approach things and they recommend something, a financial person, somebody who is like we run deals. So I'm not completely unbiased I want everybody to do our deals, because I think they're all great. But, another passive investor, that's a great person to meet for a passive investor, because they will simply be in the place. They're just trying to get the best information and help someone else. So they'll be very collaborative and very helpful. There's no agenda. They're not trying to sell anything. They're just, hey, I invested with these guys. I love them. I would never work with these guys again. I have this new asset over here. And so I think that sharing of the knowledge is really, really valuable. That's why I try to tell a lot of passive investors, like, go to local meetups. We run a local meetup in Glendale, California every month with a bunch of about 50 investors. And there's ones kind of all over the country people can go to. And the best meetups and kind of ways to meet folks or conferences are ones that aren't pitching anything. There's no big coaching program or run to the back of the room to go get some special
high ticket.
Yes, I know high ticket. You're not being upsold. It's just you're going to really have some great education and really meet some amazing people. But again, I think all of us do have specialized knowledge that we bring. It's not like we come with nothing. We come with, like, I came with all this medical sales experience, so it really is very transferable to working with investors and really figuring out what they need and establishing a long-term investing relationship with them.
That is so cool. I love that. Why are people so scared about money and investing?
Why are people so scared about money? That's a good. Well, I think there's a lot of reasons.
And you have like 2 minutes.
I have 2 minutes. Yeah, so do your best. Yeah, go for it. Well, I think money. What does it symbolize? It really involves security. It involves freedom. There's a lot of emotion tied up around it. There's two primary emotions most people experience around money. A lot of it is fear that I'm not going to have enough, or I'm going to lose money. I'm going to lose, or if there's a chance to have greed, hey, I'm going to make a whole bunch of money. And so there are ways you can take advantage of that. Most investors, typically look historically, and like they'll sell at the wrong time when things have crashed, when you really should be doubling up. And I talk about that in my book as well, being a contrarian investor. And then when things have gone crazy and it's, your Uber driver's telling you about a certain investment, maybe time to look at selling and making your way to the exit. Emotions are comfortable. They're natural. There's kind of this big, they call it, Warren Buffett calls it Mr. Market. Mr. Market could be super exuberant, or he could be super depressed, and he'll sell stuff on a certain day that's super elevated, and other things that's just super depressed. And if you can take advantage of that and invest when you want and see when a deal is there, it can help you take advantage of it. But it's hard. It's really hard to keep steady emotions. That's another reason why I like the alternative investments, because they're not liquid, right? If something you can buy and sell a stock, if a stock goes down by 50%, you technically should buy more or just hold it, but a lot of people will sell it. If you have a 5-year kind of long-term hold private deal in some other business, whatever, maybe you can't sell it, right? So you have to sit through it. You don't know the valuation day to day. And so I think there are some advantages even there of not being kind of controlled by some of those swings in price.
Yeah, for me personally, especially with the tech stock, because I know tech is volatile. So before I'm going to ask how we can get in touch with you, learn more about you, and of course, where we are going to get your book, but I really want to leave this with a very strong message about taking charge of your own financial future. You made the shift, and you're very successful at what you do. You have a great network. People like you, people believe in you. What was it, or what is it that we can tell our beehive is, in order for you to take control over your financial future, do this?
Yeah. So, there's a number of things. I think the two most important things, I use this to 20x my net worth, really was networking and education. And they're not, it's not super sexy to say that, but it's some of the best, people, the most wealthy people in the world read hours a day. Mark Cuban and Warren Buffett read hours a day. Oprah Winfrey, all these people read all the time. So it's the idea of just continuing to learn and realizing that there's another quote that says, you'll be the same 5 years from now, except for the books you read and the people that you meet. So that's basically networking and education, right? The books, and there's other ways you can educate yourself, but there's also the networking, right? Getting in the room with amazing people. If you grow your network and you're able to provide value, you're able to grow that way. And that's kind of what I've done, is to syndicate and grow a business that way. And then there's other ways, people just through passive investing, you can do it as well. So I think those are really the two big things. There's really no way to shortcut it, especially on the education side, because no one cares about your money like you do. And so you've got to understand what you're investing in. And I think that it's so much better, like 10 times better to learn how to invest yourself than to just trust a money manager to do it, because the interests will never be aligned. You can't get alignment of interest unless somebody's a business partner or something. Like, it's really hard to get, alignment. So I think those are the two biggest things.
Yes, and it is literally the most important thing. You work your entire life to create this. And
Yeah.
how can you not know? But I think a lot of people, when I was in Germany and I looked at some of the stuff that I see friends and family do, they're stuck in a poverty mindset. They're stuck in the fear mindset, and that there's not enough. And because they focus on it so much, there really isn't. And it scared me. Like I got back, I was, sitting on the 12-hour flight back, and I'm going like, I'm gonna do the work. I think I did well, but I think I can do better, and I want to know more. So I think this call is really super important for anyone who wants to create financial freedom, because putting money in a 401k is probably not the best return on investment there is.
Yeah, and that's 100% true. So educate yourself so you can fire yourself, and then you can choose to work when you want to work.
So tell us about the book. Where can we get the book, and what will we learn in the book? And then if somebody wants to connect with you, where will we send them?
Yeah, so the book is called Fire Yourself. It's replace your working income with passive income in 3 years or less. So it just gives different ways to do that, particularly for high earners. If you're making a fair amount of money, how do you start investing? How do you scale that up? And how do you get to where work is optional? Or you can, when you retire or you're with your business, you can at least have the choice, because we don't know, if we'll become disabled, if a family member will need care, if we, want to travel around the world, we just want to have the flexibility. And so this really allows you to do that. You can find it at Amazon, anywhere books are sold. Amazon's a great spot. It's also on Audible. And then you go to my website, bronsonequity.com, Bronson Equity. And there's the free, you can get the first couple chapters there for free. And then also, if you want to join our investment club, you can check that out as well. And I'm on all the social medias as well. So.
Yeah, and you also have a podcast, so let's mention that as well.
I do, yeah. So it's called the Mailbox Money Show. So it's basically dedicated to this topic. How do you vet and analyze deals outside of traditional investments, real estate, businesses, different types of things, reducing taxes, just all the things high net worth people want to know, and how to be a passive investor. So, but yeah, it's been a lot of fun, Beate. I really appreciate you having me today.
Well, thank you so much for being here. And that is it for us today. I hope you found this podcast and the show valuable. If you know anyone where you think they need some education on money, please go ahead, share the show, and share it just with one other person, because I think the stuff we talked about is really important for financial fitness. And that is it for us. And thank you so much for listening or watching, and goodbye. Thank you for listening to or watching the show. We are so excited that you're here, and we are very grateful for you. Now it's our turn to ask you for help. Please do share this episode with one other person that needs to hear what we were talking about today. If there's any question you have about business, please do reach out to us and let us know. And don't forget to schedule your complimentary uncovery session at uncoverysession.com, where one of our business growth advisors will help you to figure out what your number one business growth blocker is in only 15 minutes. And that's it for us today. Until next time.